Hi, this is Dave, and welcome to the weekly market recap. I'm closing out the week for Friday, March the 8th, 2013. Recording this video on Sunday, March the 10th, a little bit later than expected, but had a couple things to do this weekend, so we're recording this video on Sunday. Just a quick announcement before we get into technical analysis and review of recapping of markets. We have a really exciting event coming up here on Saturday, March the 23rd. Market Trading Concepts is hosting the meeting, and the meeting is going to be it's not a meeting, it's rather a half-day seminar at our live trading floor here in Burlington at Market Trading Concepts. So on our website, if you go to www.markettradingconcepts.com, just put that here, markettradingconcepts.com, you can click on the live events, and we have an educational special here, or you can actually reach it from the events calendar. This is something we'll be keeping updated. Actually, we have a couple events coming up. We have a CSTA Oakville meeting on next Wednesday. Wednesday would be the 13th. So that's going to be an interesting meeting in Oakville. But this, just keeping on track here, you can look at the events calendar going forward. We have 2 monthly meetings that go on pretty regularly. They are the last Sunday of each month, which is our Burlington meetup group, and the second Wednesday of each month, which is the CSTA Oakville chapter. So just keeping on task here. This meeting or seminar that we have coming up on Saturday the 23rd, which you can get to from our website here, using seasonality, fundamentals, and technicals, a systematic approach. So there's an early bird special. It's a half-day seminar with a true market veteran, Don Valu. His approach is second to none. It's a really, really great approach in helping to time the markets in terms of looking for seasonal strength or weakness in specific markets. And, all markets exhibit seasonality, including, the Forex market, including currencies. So there are a number of resources that Don offers on his website all the time. I encourage you to check them out. There's a number of websites that him and his partners run: timingthemarket.ca, equityclock.com, dvtechtalk.com. So on these websites, Don and his partners post what I would consider information that is comparable to probably the best newsletter services that you will find out there, and he does offer them for free. So we do have Don coming in on the 23rd, and Market Trading Concepts is hosting the meeting. There's an early bird special of $149 plus HST, and that ends on Sunday, March the 17th. Now, we don't have any control over that. The website will automatically, roll over to the $199 plus HST price after Sunday, March the 17th. So seating is limited to 15. Encourage you to register now. This is a meeting that we're hosting at our trading floor. And, of course, we're charging for the meeting because we're putting, the effort and the time into organizing the meeting, and also, for the benefit of the information being offered, a small price to pay. It's really, really going to be worth it. And, and then we'll be feeding, and offering refreshments throughout the day. So this is going to be a great educational seminar on Don's entire systematic approach to how he approaches the markets, helping to time the markets using seasonality, and then using fundamentals and technicals to pinpoint entries into specific markets. So if you don't know about Don or his work, feel free to check out these websites. I'm sure you'll find that his work is really, really unique and really, really interesting. I'm starting to use his work more and more myself. That's why we're interested in bringing him into, to learn and to help our group to expand their knowledge of the market. So if you're a swing trader, position trader, it doesn't really matter what your time horizon is. This event is for you. So if you want to register for the event, there's a link here. Register for event. That will take you over to the registration page, and this will, once you submit all the data, it will automatically, give you the early bird discount of $149 plus HST, and it will link you over to the payment page. So that being said, let's take a look at what's going on in the markets this week. Let me just close this out. So the big news in the market this week is the Dow Industrials hit new all-time highs. They broke above the 2007 October high. So the Dow is trading at all-time highs. So this week we're going to look at the Dow Industrials. On my platform, the ticker symbol is $INDU, Dow Industrials. And you can see here the previous highs were at 14,198.10. Those were the October 2007 highs that we've been talking about, going back a number of videos, that, we were so close to those levels that, we're probably just going to come up and test them. That happened, let's see, this Friday, Thursday, Wednesday, Tuesday. That happened on Tuesday of this week, and we didn't actually even really get any significant pullback. So let me just zoom into this market so we can take a closer look. Okay, so here's the major resistance, October 2007. I wasn't really interested in shorting these levels. However, I wasn't really interested in getting long into these levels either, just because it's such a significant resistance level. I didn't think we would blow right past it. Now, the interesting thing is a lot of people are really waiting for the pullback. And, thinking about that and thinking about, the market generally likes to move with the least amount of people on board. Everybody's really expecting a pullback here, and we're just not getting it. So that is something interesting to note. That is something that we have to keep an eye on, and that we have to be mindful of, that the market is, most people are really waiting for the pullback. And you can see here we broke this level and we've traded above the level. We closed decisively above this resistance level, going back from Tuesday. So that's 4 days. To me, that essentially is, that level has been broken. So going forward, what I was looking for was a pullback, all the way down to this level here, which would have been a test of this sustainable trend line, off of these lows from November of 2012. So that's kind of what I was looking at. This pullback, it would line up with some of these swing points, and it would line up with a 50% retracement from this low, to the highs in and around here. Okay, so that pullback, that's what I was looking for. That's what I was interested to, look at taking long-term positions in the market. So at this point in time, we've broken that level and we're just trading above it. So I'm really cautious here. I'm a cautious bull, but we can't fight the trend. The trend is higher. So what I'm really looking for at this point in time, I'm still looking for a pullback. I'm not really sure how deep the pullback might become, but the 21 period exponential moving average down here would be fantastic. Even a pullback, if we trade above here, pulling back and retesting the breakout area of the resistance here at 14,198 and then pushing back off, that would be an interesting area to look at as well, because once we've traded above it for so long, I'd be looking to see if we pull back down to that level, this support would start catching up, this rising 21 period exponential moving average, and there might be some confluence between those levels. So I really don't know where this market's going to go, but it is definitely it's tested the highs, it's tested the resistance, still waiting for a pullback, cognizant of the fact that the market tends to do the unexpected. So I'm just going to be keeping an eye on it and looking for some pullbacks to some of these levels down in and around here, and see what we can get from there. So the MACD resolved itself. We did have a bearish divergence going back here, with this making newer highs, the price action in the MACD rolling to the low side. But you can see the MACD now has rolled back to the high side. We're not getting any significant volume coming in. I think a lot of people are really just cautious on this market. They're really not sure what to do. And I think what's really driving this market is in my opinion, what the Fed is doing in terms of Fed policy and what the dollar index is doing. So let's jump over and take a look at the dollar index. So here's the dollar index. Actually, let me just jump back 1 second. There was one other key point I wanted to look at in the Dow, and I wanted to look at, you've got sort of this cut pattern here, and I want to look at where the extension of that breakout might take us. Let's see, and I need to turn on the 1272 extension, the 1618, and okay, so the 1618 extension, which I consider, quotation marks, the hard target, is at 14,375. So we've actually met that target off of this sort of, cut pattern where you're looking at, the breakout extension above there, and we've hit it right there at the 1618. So that's really interesting. Normally, under normal conditions, I'm not really looking for any more upside than that. I definitely am looking for some sort of pullback. Okay, so apologize for jumping back and forth there. Let's jump over to the dollar index. I believe this is the market that is really driving all of the major market activity. And if you look at the relevant highs and lows, I'm looking at, this is the relevant high, this is the relevant low, and you can see we put in a complex sort of bottom off of these lows here. As the euro, was trekking higher, the dollar index was, just holding those support levels. We talked about that over the last several weeks. So at this point in time, from this high to this low, you can see the relevant fib levels, the line in the sand between long and short, from a fib perspective is 82.35 to 82.50. So what I was looking for was, I was looking for this sort of move here where we would push into that 618, which we did, and then we had a shallow pullback into the 8-period exponential moving average, and you can see Friday we closed above the 618. So to me, if we hold above that 618, above 82.35, above 82.50, we seem to have closed around 82.73. To me, that's a real game changer. That's a real trend changer. That's really going to drive the markets going forward. And you can see here my trending indicators net bullish. You can see the MACD is net bullish. You've got a little bit of picking up in volume here, over this recent, uptrend activity. But the major point is really these key levels. So at this point in time, what I'm specifically looking for is potentially a retest of these highs, somewhere up into some of these higher levels, and then we'll see. But what that's going to do, it's going to put pressure, in my opinion, it's going to put pressure on all other markets like commodities, and and that's really what I'm looking at with this sort of trend changing move. Now we've only spent one real solid close above that level. So we really need to see a couple of days of activity, sort of like the Dow has spent a couple days above its major resistance levels. This really needs, one day doesn't make a trend. So we really need to see, if we're going to either keep trading above this level or maybe pull back and then push above it decisively. But we really need to hold above those levels in any instance. So let's take a look at this from the perspective of the euro. And if we look at the euro, the key level in the euro to hold is $1.30. So let's just flip over to the euro chart, and you can see here the euro chart is holding right at $1.30. I believe it closed at 1.2999. I mean, could you be any less, line in the sand, any less decisive there? We closed right in and around that major support level. So we really, in order for the dollar index to really hold its above its resistance, the dollar index really needs to break, the euro really needs to break $1.30 here and close decisively below $1.30. That to me would give confirmation that the dollar index is really going to hold its resistance, and the and the euro is really going to fail its major support level here. So that's kind of what I'm looking at. So that's the story that's developing. But what we really need to see is we need to give it the market a little bit more time for that to play out, because you can see here the euro is really holding right onto that key support level. And, if it holds onto it long enough, you could really get a hard bounce off of that level. So I think we really need to, keep our powder dry. That's what I'm going to be doing. Going to be keeping my powder dry, and I'm going to be looking, and giving the market enough time to until the picture is, obvious, until it's clear. I'm not really jumping into this. I'm looking at these as key levels, key inflection points, and looking to see where might be the best opportunity to get onto this trend once it actually kicks off and develops. So we're not quite there yet, but those key levels are definitely in play, and they're definitely relevant. Going back, we've been talking about these levels for several weeks now, if not longer. So let's take a look at jumping back to the stock indices. Let's take a look at the S&P futures. They're doing the same thing. They're testing the 1618 there of the breakout of this sort of cut pattern. Let's take a look at the Nasdaq, which the Nasdaq is definitely weaker, but it's holding above its 618 here at this level. So it's it's been grinding around here, and you can see now it's starting to follow. It's not as strong, but it's starting to sort of follow in line with the other indices. Let's take a look at the transports from a Dow theory perspective. So the transports broke. This is really the relevant level here when the transports, they had the measured move off of that box play there, and from the breakout point they moved 100% of that move into this level, and then you can see they pushed higher, they pushed lower, and then they broke above this level right in and around there, and they're holding in and above that. So that lends credibility, to this rally in, the Dow hitting new highs. Well, the transports are hitting new all-time highs as well. So you've got confirmation in the Dow transport. So usually when I see these kinds of moves, you hear a lot about Elliott wave analysis. I'm not a big Elliott wave guy, but I have noticed, like in my trending indicator, for example, you get movement or waves in the market. And you can see here, you've had one wave up here, you've had another wave up here, another wave up here, and another wave up here. And you can denote that by, you can see how it goes bright blue and then it pulls back, dark blue, bright blue, pulls back. So you've had 4 kind of up waves here in the market. Now this is not Elliott wave analysis, but it is, usually you have, once you hit the 5th kind of move up here, that 5 number in the market is really important. I know that Elliott wave analysts look at that as well. So what I'm really looking at is maybe one more potential push up there, seeing where that will take us, and then seeing if we're going to get a pullback. Other than that, I mean, I really don't have much to to look at. I don't think these levels are really actionable. We really do need some type of decent pullback to to get interested in the market. I don't like personally to buy the highs hoping they'll go higher, although a lot of people do use, the breakout of 52-week highs as valid strategies. I'm a little bit, I guess, more cautious on this market. So for what it's worth, and I may miss the move, and that's fine. I'm okay with that. So those are the major points that I wanted to cover off in this market. So for all intents and purposes, the major points of this video are done. But I am just going to flip through a couple of other charts that I haven't looked at in in a couple of days, and just kind of see what my gut tells me about these markets. So let's look at gold. So to me, gold looks weak. It has major support here at 1539. That's a key weekly level and a key daily level in the gold futures. In my opinion, it's net negative, but you can see this sort of pattern coming in here with these, the MACD looks like it's going to roll higher, and you see these tails. Friday we closed more than 50% off the lows here, and we didn't actually go lower than this point here. So to me, this is the support level right now. That would be my line in the sand, where if this level holds and we put in a minor lower high, we could get a bounce into some higher resistance levels. So if we break this level here around 1554, I'd be looking for a test of 1539. If we hold this level, I'd be looking for, a move maybe into as high as 1600 to shake out all the shorts in this market. You can see the stochastics have kind of bottomed and the MACD looks like it's bottomed and crossing, and it may, be looking to put in one of these sort of moves here. So I'm very cautious on the downside in the gold at this point in time, unless it breaks, 1554. That's, to me, is really the decision point. So let's take a quick look at gold's sister, silver. Silver looks sort of like the same story, sort of putting in this sort of complex bottom. The MACD looks like it's rolling to the high side. The stochastics look like they're rolling to the high side. So I would be very cautious if I were in these markets. I'd probably be looking to exit. I don't have any, positions in gold or silver. Just kind of looking at them for what the charts are telling me. Let's take a look at crude oil. Okay, so crude oil held this interesting level here. So this level here comes off of this trend line here, but it also comes off the break of this downtrend line. See where these two trend lines are converging? You can see that crude oil is finding support in there. That was a question we sort of had going back over the last couple of videos. If it's, the question is it going to hold, this sort of support trend line area? Well, it is holding that level, and now it's coming back into, some dynamic resistance levels overhead. So that's interesting. Not actionable in my opinion, but interesting. And let's take a look at the natural gas market. Okay, so the natural gas market, we held this low in here. We put in a lower low here. We broke this trend line. I think I had mentioned last week that even though we broke this trend line, I wasn't really that interested in that level. Where I'm really actually interested in this market potentially is, because this is a little bit sloppy and choppy, but I did recognize it broke that trend line and maybe we could push higher. I'm actually interested in a break of this swing point here to see if we break this swing point, if we can punch up into, this swing point, this resistance up and around these levels up in here. So that's this area is where I'm really more interested in. I know it's sort of extended from these lows here, but I'm looking at it more from a chart pattern perspective where, you break this trend line and then you come back up above this swing point and then potentially get a move, to retest these highs. So that's sort of the area I would be more interested in playing in that sandbox. Let's take a look at, let's see here. That was the natty gas. Let's take a look at the, let's see, what other markets could we just quickly look at? We looked at gold, we looked at silver, natural gas, crude oil. We looked at some major currencies. Let's look at the U.S. dollar versus the Canadian dollar in the Forex market. USD CAD. You can see that I've been watching this market here myself, and you can see here that I haven't been trading it, but I've been watching it carefully. And you can see here that the reason why is because, sometimes when you're trading, you have U.S. dollars in your trading account. And, the Canadian dollar looked like it was just going to, fall off a cliff at some point here. And then when we started to put in some bullish action, and you can see that we're finally, we're above par on the U.S. dollar. So the U.S. dollar is trading higher than the Canadian dollar. It's been a while since it's really done that. We've really been below that level for quite some time here in and around, this entire consolidation area. Now we're breaking out and starting to go a little bit higher. The major resistance obviously is, these highs in and around $1.04. We've had some major resistance in and around $1, $4, $4.50. Just under $1.05. So it'll be interesting to see if we can get anything going. I think the dollar is really driving this market, and that's all I really wanted to cover this week. But just to leave you with these thoughts, I think the U.S. dollar is really driving this market. If you're going to be trading, in these markets, I think you really need to watch what the U.S. dollar is doing and its relationship to all the other major markets, including other currencies, and not only other currencies, but commodities, because a lot of commodities are priced in U.S. dollars. So you really want to understand the relationship between the U.S. dollar and how U.S. dollar strength or weakness drives those other markets. And on that note, let me just look at the 30-year bond, because I know there was a major move in that. So this was a little bit of of a mind bender here. We were looking at this support level in and around $1.42 and 3/30 seconds to fail, and we just held on to that level all the way down to $1.40, and then we popped up and broke this trend line, and now we came back down into that level, and now we're retesting, you know, those lows again. So this has been a really tough market. Some of the guys and I in my live trading room have been thinking that, you know, the bonds were done for, and then they kind of gave us this fake out move here with a lot of strength. Actually, you know, we broke through this really decisively off these lows, but only to come right back down into these lows, and bonds are looking weak again. So I'm sort of looking for a bounce off of these lows, and this is the structure that I'm specifically looking for. We've had this kind of movement here. You know, we're down, we just probe below these lows here, but you can see the stochastics here are buried to the downside. So I'm looking for some kind of a bounce here, and then I'm looking for a structure where maybe we're going to put in a lower high, you know, from the chart structure perspective, that would coincide with some sort of trend line, and then come back down through that level. If we do that, then that's where I would really get interested in a break of this level. You know, where we would do this kind of thing. But at this point in time, you know, the MACD's rolling lower. We're finding resistance at its zero line. So this is really the key level that we need to hold in bonds. Otherwise, we're going to break that level, and we could be looking at, you know, potentially higher interest rates. Now, I'm really cautious on this market for the simple fact that, you know, the government, specifically the U.S. government, is wanting to keep interest rates low and wanting to keep inflation high to keep the economy going, keep the system running. So, you know, I would be looking at potential intervention, you know, off of some of these levels and some kind of crazy moves higher. I don't know how much, you know, powder, you know, they have left in their reserves to, you know, keep doing this. But until confirmed, this is kind of what I'd be looking for. But I'm really cautious about this market because, you know, the governments can jump in at any time and prop this market up. So sort of what I'm looking at. I hope it helps. Good trading, and I hope to see you at an upcoming meeting. We do have the CSTA Oakville chapter meeting next Wednesday, and we do have that event that I mentioned at the beginning of this video with Don Valu at our live trading room. You know, an information educational session. I hope it helps, and I look forward to seeing you either at the next update or at one of these interesting events that are coming up. Good trading, and have a great rest of the weekend and a great next week. Bye bye.